You're listening to Fund Shack. I'm Ross Butler, and today I'm talking with Tariq Fancy. Until 2019, Tariq was Chief Investment Officer for BlackRock's Sustainable Investments. Earlier this year, he revealed the reason for his departure was a disillusionment with the impact of sustainable finance. He now runs a North America-based online education charity, Rumie, which is very active at the moment in helping girls and women with the situation in Afghanistan. Tariq, it's great speaking with you. I've been really looking forward to this conversation. I wonder, for people that don't know, if you could just give us a brief bio of your experience in the investment world and elsewhere.
It's so great to be here. And a quick note on my background. I started out as an investment banker for a few years, covering the tech sector in Silicon Valley, actually. Then spent a long career as an investor, mainly based out of New York, doing a lot of distress and special situations investing at a private equity firm. Later built strategies and did a few other things. And then in 2013, left to create Rumie, which is a 501c3 or a charity that uses digital technology to advance access to learning for some of the world's poorest communities. And then came back to the finance industry in 2018 and 2019, where in some sense I was sort of merging the two of investing in financial bottom lines and then social bottom lines, in a sense, or at least trying to, as BlackRock's chief investment officer for sustainable investing. And since end of 2019, I've been turned my focus back to running Rumie.
Okay, that's lovely, snappy bio. Can I ask you, why did you leave the lucrative world of private equity in the first instance to go and run a charity?
Honestly, it was a personal decision. It was after the passing of my business school roommate and very close friend. And he and I sort of shared this passion for someday doing something, taking our skills that we had learned in finance and doing something that we thought, we really cared about and was making a bigger difference in the world. And he contracted stage 4 cancer, and at some point he couldn't keep kicking the can down the road. And so while he was fighting stage 4 melanoma, he actually created an education charity in Kenya, which is where my parents grew up. My family immigrated from Kenya, and that sort of inspired me then to take the idea I had for Rumie and just go for it.
Fantastic. And did you find your previous finance experience useful in setting that charity up, and how's it going?
So it was useful, actually, very useful, in the sense that there's a lot of things I didn't know around education, international development, and so on. But I did know technology well, and I think that the finance background actually helped me understand, really how to build something in a careful way and be kind of ruthless about execution. So, and it has been going well. We're doing work right now for digital learning for girls and women in Afghanistan that we started in 2017, actually, and that is extremely important right now, given the situation on the ground and the sudden restrictions on access for girls to learn there. Given that 80% of Afghans have access to a mobile phone, which wasn't the case 20 years ago, when the Taliban were last in charge, it does provide sort of a connection to allow them to continue learning.
So you've had to pivot quite quickly, given what's happened over the summer. How have things changed? Are you managing to reach people?
We are managing to reach them largely because through a mobile phone you can learn safely from anywhere, and we're working with a mobile operator in the country, and so there's sort of an infrastructure is built to reach people safely at any time and anywhere that simply didn't exist 20 years ago. And so the power of mobile technology when that infrastructure is built out is extraordinary. And, in most places in the world, Facebook and other applications are aggressively growing. And our goal is that people should be, availing themselves of free learning at the same time using that technology. And all the work we're doing is in local languages in Dari and Pashto, and has seen extraordinary uptake on the ground, just given the needs. It's working really well. So the goal right now is to quickly expand the content and subject areas and the distribution so we can meet the needs of 38 million Afghans whose lives have been turned upside down, and in particular the women who will bear the brunt of it.
So how do you finance it? How can I make a donation? Where do we go?
So you'd go to about.rumie.org. Rumie is RUMIE. And if you go to about.rumie.org, it talks about some of what we do. We'll be adding a lot more information on Afghanistan specifically in the next few weeks as we grow this in response to the crisis. But if you go to the site about.rumie.org, it gives a lot more information on what we do and how we've been doing it for a number of years now.
Great. Well, the best of luck with that. That sounds like a really wonderful initiative. I suppose the reason that I came across you, though, was when you took a break from the charity, if you can call it that, and you joined BlackRock as its CIO of its sustainable investing business. And you left there in mid 2019 because my understanding is you didn't necessarily agree that sustainable investment as a concept was necessarily doing what it says on the tin. And I'm interested in that. I'm interested to know, to what extent does it not do what it promises? Is it ineffective? Is it counterproductive? Or is it not as effective as you hoped? And why?
I came to the conclusion after 14 to 15 months there that it was ineffective. And it was in a sense harmless because it wasn't doing much good, but certainly not what people thought it was, but it wasn't harmful. The conclusion that it's harmful is something that I reached after leaving and recently went public to make the argument around. And the idea being that if you have something that people believe is creating impact, and it's based on a set of notions that I would argue are sort of based almost on fantasy, a convenient fantasy that we can sort of win, sort of, make lots of money investing and fight climate change at the same time. If it doesn't work, what I realized was I knew that when I had left because I had the vantage point of being a trained investor who looked at integrating environmental and social considerations, ESG broadly, but E and the S in particular is where people are focused across the largest pool of assets available in the world in capitalism today. And so I realized that if I knew that it wasn't having any effect, but the rest of the world didn't know that, then there's an argument to be made that it's actually actively delaying us because the fantasy might take a few years to work itself out. And so while I was away, I worked on a study with the university, and we actually found that the more you feed people ideas around, stakeholder capitalism is the answer, to reference the Business Roundtable's argument on, how we improve social outcomes, that, ESG is good for investing, that Wall Street's focus on climate risks, a whole bunch of things that in practice I found had no real impact. The more that they believe it, and the more that the people who see headlines like that and hear that information are then less likely to argue that we need government regulation to address these problems, for example, a carbon tax. And those are exactly the reforms that all of the experts in society, including Nobel Prize winning economists, have been telling us we need for decades. And that really is where I think sustainable investing now has turned the corner and is actually potentially harmful in that it's wasting valuable time.
By some measures, about a fifth of all the assets under management are managed in some respect with reference to ESG principles. And so if what you're saying is correct, then what we're looking at is a colossal, could you call it a misallocation of resources, or at least an allocation of resources that aren't being allocated in the way that most people think they are. This isn't a small thing. This is a huge thing.
I would agree. It's an absolutely huge thing because in many ways, I'd say that I wouldn't throw ESG out entirely because I think a lot of people will say, well, first of all, they'll be surprised at the fact that ESG could be harmful to environmental and social considerations, given that the whole idea of why we're in theory doing it is largely that it's supposed to be beneficial. So that's one bit that'll surprise people. But I would say that it's not so much everything in ESG is useless and needs to be thrown out. It's that you have, I think, tools, standards, data, and people, frankly, human capital that have come in around ESG that are all helpful. Unfortunately, they're being combined into narratives and products that are harmful. And I say those separately. There's narratives around it that I think are very dangerous and mislead the public. And there are a set of products that are being built off those narratives that generally imply that they're creating real world impact that they don't create. And there's no reason to believe that they do create. And that is also very harmful because on one level, it's obviously, you would argue it's unethical to sell someone a product if they believe it's doing something in the world that it isn't doing, just as an attempt to sort of get higher fees out of it, which I think is quite widespread across the industry. But I think secondly, if the narratives around it are based around the idea that you can buy an ESG product and make money and fight climate change at the same time, what we really need to do is step back and look at what we're actually saying. The mechanism for change through which buying an ESG fund or doing ESG integration or any of these things create real world social value is based on an idea that the markets will self-correct. I mean, that is ultimately at the end of the day what it is. I found that out because I spent enough time trying to understand how to articulate just not just how it's good for investing, which was it took a bunch of time to figure out because frankly, a lot of what was being said in the space was quite. It wasn't greenwashing, but it's what someone else I know called green wishing, right? It was so unlikely and hopeful that it was, borderline greenwashing. But I think at some point, these narratives they're all based on the free market correcting themselves. They don't work in practice. I can talk in detail about the fact that I think that there are solutions we can implement, but the ones that are being done in the industry aren't it. And so what you end up seeing is that there's great hope around ESG is going to do something, right? And every year you see more and more talk about ESG, right? It's incessant. Everyone claims to be doing it and thinks it's the big thing. You have this growth in ESG assets, right? So you can almost graft what I call sort of sustainable, and all the words are increasing. They're increasing alongside ESG assets. And then, funnily enough, those are both increasing on a graph alongside carbon emissions and inequality and all the things that they're arguably meant to do something about. And the reality is because, when you dig underneath these narratives and you dig underneath what the products are, they don't seem to have much of an effect at all. I mean, for the most part, there's a fraction of cases where there's a kernel of truth, but for the most part, it's mainly marketing, and that's really where the concern comes in for me. So to give you an analogy, I've used places when I first left BlackRock. I transitioned out over 6 months and did it on good terms, and I still don't. I talk to folks at BlackRock, and I'll tell you, I don't think it's a BlackRock specific problem. I think it's an industry problem. Although BlackRock is, of course, the biggest player and has been at the senior management level has been a big voice around it. But I think that what I thought of then when I was leaving was that it was like giving wheatgrass to a cancer patient. The cancer is, I would argue, not just climate change, which is slowly spreading, but also I would say inequality and other social issues that undermine not the planet but our political systems. And so it was like giving wheatgrass to a cancer patient because it's very well marketed. It looks and sounds nice. It's green. But of course, there's no reason to believe it's going to stop the spread of cancer, nor any experts who have told us that that would be the case or should be the case. And I think where I landed after and why I went public this year about it was that I started to realize that it was almost undeniable in my mind that the rest of the world didn't know the extent to which most of this is just marketing. I would argue marketing intended or certainly designed, whether intentionally and cynically or not, to preserve the status quo. And what that means is that it's not just giving wheatgrass to a cancer patient. The data and the study that I had done with this Canadian university showed that it was actually misleading the public, and it was like giving cancer to wheatgrass to a cancer patient, and then realizing very definitively that that cancer patient is now delaying chemotherapy because of the sort of frankly false promises. And that is, I think, the biggest concern that I would have is that it's now becoming counterproductive.
Yeah, I think if you conclude that it's not doing any good, I think you have to then conclude that it's doing harm because we've only got so much attention and we've only got so many resources. There's only so many things we can do. And if we're doing something that's not helping, then it's part of the problem. It's not part of the solution. So I can see how you got there. I suppose in terms of moving forward, I'd quite like to understand why the problem is persisting and why people are continuing to promote the concept. Now, maybe there's cynicism there, but maybe they're just mistaken. I mean, the investment industry is full of smart people, and your criticism of it in your series of essays on Medium, they're very good, but not particularly difficult to understand. So why aren't people getting it? Why aren't people becoming a little bit more skeptical and thinking, well, maybe this isn't working?
You're asking the right question. I think that is starting to happen now. There's no question that based on certainly the inbound and the response I've gotten that I've sparked a debate, which was my goal. I think that there's a debate that we desperately need to have sooner than later that's in the public interest. And I don't want a debate that has a bunch of people saying capitalism is crap and throwing stones at it. And, it's important to understand the majority of millennials do not believe in capitalism, right? There's studies around this. I would argue it's because the version of I would first of all I don't share the baby boomer perspective. I sit in between those two generations from an age perspective. I wouldn't say that the baby boomer generation is correct in blaming millennials and saying, oh, they don't just get it, which is the sort of version I've heard a lot. I would turn around and point the finger right back at them and say, no, listen, the reason that they don't believe in capitalism is because they're seeing a poor version of it that's not serving the long-term public interest. And maybe I'm old school, but I think business and markets exist to serve the public interest rather than the other way around. And so I think that what's happening now, is, to answer your question, is that people are starting to ask these questions. I don't think they've been asked because the incentives of the system are operating exactly as we should expect them to. So one of the things I discuss in the essay is that I don't actually think that you can put it at the doorstep of any individual person and say this person is bad or evil. I think that a system uh, works according to how we should think it should work, according to the incentives of the people. Right now, for the most part, the average CEO is very short-term incentivized, as well as the average investment manager. So they are, the average CEO pay is 320 times the industry worker. That's the highest it's been in decades. The average CEO tenure is 5 years. That's the shortest it's been in decades. And so very clearly, capitalism, from the perspective of not just managers, who are incentivized towards profit, also fund managers, they're very short-term oriented. And it's important to note that they also are legally obligated to chase profits, right? It's not like there's a sort of caricature of the CEO as being sort of this magnanimous individual who has in their ability the controls to do all the right things and save society if they want. I actually think that's unfair even to the average CEO or fund manager. I mean, having been a portfolio manager myself once, I know that you're bound by obligations around fiduciary duty, right? You're focused on dollar value, right? Not social values. And you're also financially incentivized around return. And so the idea that the industry has pushed is that, well, ESG integration is a win-win. Why? Because ESG is good for investing, so we are going to do more of it. And that's not out of the bounds of fiduciary duty, because again, it's not the old school what people used to think, which is that it's going to cost you money to do good. Somehow this new thesis has been weaved that no, it's good for investing. So therefore, number one, it's fully compatible with fiduciary duty. Number two, you don't need to worry the industry is going to do it all by themselves, because it's good, and why wouldn't we do it, right? Like, you can trust us because we're profit seeking and there's profit there. And I think that the central part of the debate that needs to be addressed is the idea that that is frankly not true, right? ESG being better for investment returns is financial jargon proxy for profit. Responsible companies are more profitable. The fundamental problem that in our society that we all kind of know intuitively, and certainly I saw across the data of the largest asset manager in history, is that our fundamental issue is that there's a lot of things that are being done in society today that are not good for the public interest, but they're being done because they're profitable, right? Burning fossil fuels today is cheaper than it needs to be for us to make the transition that we need to make. And so for decades, using this one as an example, people have said we need a price on carbon, right? I mean, that's pretty simply the answer. Like you have to tax the pollution, otherwise there's no disincentive to do it as much. And in response, we're not getting a carbon tax, and we're getting a bunch of anecdotal stories about, you know, green is growing and this and that, and that's it sound good, but once you dig below the anecdotes, the numbers are clear that we're not moving as fast as we need to move. And I think that fundamentally the ESG thesis itself is flawed. It seems designed more for the system to optimize delaying taxes and regulation, and then selling a bunch of high fee products in between to address social angst, than it is to actually solve these problems. And sorry for the very long answer, but the fundamental point I'd say at the end of the day is, in a short-term oriented system, you need regulation to solve these problems, because if you just leave it to the market to be correct, it will not work.
So the solution you've already alluded to is very simple to say, which is a carbon tax. Taxes tend to be national. Surely it only makes sense if it's international, if not global. I mean, how do we move forward there if that is the solution? Do you see, do you think this is feasible?
I think it is, but I think it's feasible only if we bring the debate to the US. So I'm a Canadian. I grew up in Toronto, went to university in the US, and then spent most of my working career here. I'm physically in New York at this minute. And I will tell you that the Canadian side, there's not much we can get done alone, right? There was just an election in Canada. Climate change comes up a lot. There's obviously challenges because of the west of the country has the oil sands region. It's politically tricky to figure out a national approach. And you could argue that's the same for all countries. They have internal challenges around it. And then a lot of them look and say, well, what does it matter if no one else is doing it? And I personally think that the United States, there is a way to get a global approach, but it has to begin in the US. Because if the US, like this decade, still has a position of leadership that people may argue won't exist decades from now, but I do think in the 2020s it's true that the US has a unique position to lead, as well as, frankly, today an administration that believes in science, which you know we take for granted. But a year ago, the president told people to drink bleach in the face of a 100-year, the biggest crisis in 100 years. And so, we do have a moment in history for the next few years where the preconditions are there. And I think that if the U.S. were to lead, I think you'll find that the Canadians will follow, the Europeans will follow, the Australians will follow. Because I can tell you one thing: as a Canadian, no Canadian political party wants to be seen to be the right of the U.S. on issues like this, right? And so the U.S. has an ability to lead. As a side interesting tidbit in my paper, I use the analogy of competitive sports a lot. I lean into basketball. Originally, when I wrote it, I used soccer. I'm a huge football or soccer fan, but I switched it to basketball precisely because I thought, well, there is a global approach that can work. I really do think there is. Just like right now, countries are looking at coordinating on taxes. Same idea. But that came about because the Biden administration sort of said, enough is enough. We need to work and coordinate on minimum taxes. Otherwise, people just game the system. It's politically difficult for the Biden administration to do that for climate change. I do believe they would do it. I believe that if there was the political room to do it, they would step into it. But that political room doesn't exist if the business community is unified in what I think is a completely vacuous thesis that in 2021 we can rely on the free markets to correct, the largest market failure in history. And so, really long way of answering it. I think the debate, it's the US business community needs to be, that's where the debate needs to happen, because I think that if you get to a point where you can actually split the community and say, listen, like what's being done right now is not even in the interests of people at BlackRock who are in their 20s and 30s, right, to kick the can down the road on these issues, and that there's a large intergenerational issue that's being unaddressed. You do get to a point where you can start to actually create a debate that I think gives the politicians here room to move. And I think if they can move, I do think that there's a global approach that's possible.
I like the idea of a carbon tax because it's simple. And I think with a complex problem like climate change, you need to keep the solution simple. Otherwise, you just get in a muddle and you're not going to bring people with you. But it's only simple to say. It's actually very complex when in practice. So, for example, it's always important to work out what the unintended consequences of any interference in a complex system is. And there will clearly be consequences that are negative for people, and they will be unequally distributed. So, for example, many are concerned that if you raise the price of energy, it's the poorest in the rich countries and the poor in the poor countries that will be hit hardest. And so, in order to get this through, these big political questions need to be dealt with satisfactorily.
I would agree with that. I think, I'm actually not that worried about challenges like that. And the reason I'll say that is that there's no shortage of good ideas to address that. I mean, I think there was 2 years ago, uh, a huge number of economists, including 45 Nobel Prize winners, endorsed the idea publicly of a price on carbon. And I think for that specific endorsement, the idea behind it was very much openly around the idea that the carbon tax should be revenue neutral, or in some way that the proceeds of it should be distributed towards those who need it most. And so for them, actually, they may pay a little bit more at the pump, but then they're getting much more back in, a set of other, social programs. It could be things dedicated toward education. It could be just cash dividends. And of course, the richest would be the ones that be paying, because they're going to pay the carbon tax just as much, and other sort of taxes probably around that, but not necessarily receive it back. And so, in that sense, it's a progressive rather than a regressive tax. I don't think there's a shortage of ideas to do that. I think the problem is that right now, for the same reasons you can't increase taxes on wealth or marginal tax rates on the wealthy, which have been the lows have been in decades. And the economist Tom Piketty has written a lot about sort of the growth and inequality as partly as a result of that. You kind of have a situation where the solutions are there. It's politically difficult to get them done, and I think that's largely because I think that right now those who have power are sort of beholden to a set of fantasies that say that they can sort of have their cake and eat it too. And so sustainable investing is a great idea for them. Davos and all of these gatherings of the world elite, they seem to always land on solutions that don't involve taxes and regulation. I get it. Nobody wants taxes and regulation, right? I mean, that's not something that anyone wishes. I'm a capitalist. I'm a former investment banker. It's not the kind of thing that, we run and are desperate to see happen. But at some point in a competitive market, it's kind of like a competitive sport, right? Where you're playing and there's dirty play, right? Dirty play is winning games. People are doing things that no one wants in the game, but it's because the rules haven't been updated for decades, and they've figured out ways to effectively score points and win games by being unsportsmanlike. You need referees, right? And capitalism has referees. There's no such thing as a free market. That's an idiotic idea. Every single market has rules, right? I mean, and the first lawyer you talk to will say, no, the market's a collection of rules. Those rules needs to be updated significantly, right? The thing about a carbon tax is that the crazy thing is we're discussing now that we probably need one soon, but people knew that a decade ago, right? And all that was sort of seen is that I would argue a consensus that emerged in the 1980s that was sort of a Thatcher Reagan consensus around the idea that free markets magically solve all problems. In some cases, of course, deregulation makes sense, but it's been taken to an extreme where even post financial crisis, we haven't seen the kind of regulation we would need, nor the change in narrative that like the free markets have got this figured out. And in 2021, the solutions that we're bandying about, I mean, again, there's people who have won Nobel Prizes for saying we need a carbon tax. There's nobody who said, even vaguely serious economists who are talking about ESG integration as a way to fight climate change, low carbon ETFs, proxy fights against oil companies one by one. I mean, they know that these things don't work. You need to address a systemic crisis. You need systemic solutions. Those have to be led by government.
It's interesting what you say about the free market being rules based. I completely agree, and I think Thatcher and Reagan were they were operating in a moment of time with their own political pressures. But I think the philosophies on which their doctrines were based didn't disagree with that, like Hayek or Milton Friedman. I think all of these people, they don't see freedom as an antonym, or they don't see freedom as a situation with no rules. That's just chaos. They see freedom very much, I think, as you describe it, which is a rule-based game. And freedom is a principle whereby most of the rules should respect the integrity of freedom, but that some of them have to, so I think Hayek in particular mentioned a pandemic as a situation where state intervention may be required. So I don't think the free markets are necessarily, in opposition to the concept of intervention. And the other thing I was thinking when you were speaking is that it's very easy to pontificate from a high, with a very well-paid job. And it's much harder to do good on the ground. And to do good on the ground, you typically make personal sacrifice, and then you can get a real feel for, well, what are the impacts of certain policies on actual people. And so that's why I find your bio interesting, because you've been a venture capitalist and a private equity guy and a big institutional investor, but you're also thinking about Afghan girls and the impact of the current situation on them right now and how to get to them. And I think you need that bridge between lofty political ambitions and what's actually happening to real people in order to stay grounded and make sure that your policy ideas will play out the way you think they might in the real world.
I agree with it. I think I agree with everything you just said. I think that you could take an approach based on the power of markets and still say yes, but markets need rules, and those rules need to be updated to serve where we are in 2021. And I'm not an expert on Thatcher Reagan historian or even Milton Friedman, but what I know of all of them, and certainly Milton Friedman, was that they would probably agree with the carbon tax at this point, because it's fairly clear that that we need to do something and fast, and that an ounce of prevention is worth a pound of cure. And so time is of the essence. And I think right now what needs to happen is that business leaders who understand that we need to make serious changes and quickly need to rise above their own short-term interests. And that might mean that asset owners are the ones who start doing it, the clients of asset managers, or it is ex-CEOs, or types of people who they're willing to stand up and say something that may not be in their own interests, in the same way that Warren Buffett 10 years ago wrote an op-ed saying that he should be taxed more. And so I think and I would also add, like, there's a lot that people can do even from the business side of things. I mean, I think, you know, obviously there's, you can run an NGO like I am, and of course people can support using a technology-based model to sort of support our work to grow that and impact more Afghan women. But even if you're sitting in a company and you have a specific role, there's a lot good that can be done. And I think there's a lot of room for CEOs to do better, right? And so I don't think that it's all lying when they go and they say they want to pursue the social good. But I do think that there needs to be two things. Number one, there needs to be more rigor around what's being done, because if the incentives of the system are set up in a way that it's cheaper to market yourself as being sustainable than it is to actually make the long-term investments to be sustainable, then we have a problem. And again, when capitalism is so short-term oriented, that it seems to be what's happening in a lot of cases. And why you hear a lot about ESG, but then somehow we're not making any progress on our social sort of challenges. I think the second thing, and then the most important thing, is that as much as I'm a capitalist and spent most of my career in the private sector and as a fund manager and other things, I would also say that it's important we understand the limitations on what the system can provide, right? I mean, businesses doing right by stakeholders, that's a great idea, but we can't rely on that. Just like we can't rely on a system that's built out of a series of transactions that are based on fiduciary duties and other things that are meant to maximize profit, and then look at that existing alongside a market failure where obviously it's cheaper to do lots of something that we need less of done. Any way you look at that system, it's going to produce suboptimal outcomes. And I think that right now, there's a real battle for the future of capitalism, where I think that, and it doesn't just have to be younger people who are sort of saying, wait a second, we're on the hook for this, we're capitalists, but it needs to look different. It's also, I think, a series of business leaders who really understand the importance of saying, here's what business can do, the way it's set up, and there's a whole bunch of amazing things. But here's a limitation on what business can do unless we change the rules, which is just like an athlete on the field saying, listen, like, at some point, I don't want to be playing in a game where, someone punches the defender so they can go score a goal. Like, we need a referee. And I think that that's the debate that really needs to happen now. And I hope that kicks off sooner than later.
Yeah. What's next for you? Is Rumie your sole focus?
Rumie is my sole focus right now. Right now, the kind of impact that we can have scaling technology across millions of people through their mobile phones in markets like not just Afghanistan, actually also in North America. Our other biggest growth areas are in North America, using some new tools we've built around mobile first microlearning. It's done extraordinarily well, especially in the pandemic. It's grown very, very quickly, and it scales very, very cheaply. So right now, I think that there is sort of this step change or revolution we can drive in access to learning that is truly exciting. And because I started out as a tech banker in Silicon Valley, because I taught myself programming and actually did a bunch of internships in technology before ever deciding to try out finance, and then of course doing it as a banker in Silicon Valley. And so now looking at the technology that's possible, we see so many tech trends that are extraordinarily exciting that affect our everyday lives. There aren't enough, I think, that really square or zero in on how to improve humanity and use all those tools and infrastructure to truly address things like the education gap, and that's really exciting for me, and so that's kind of the focus in the near term, especially on the situation in Afghanistan, because the people there need all the help they can get, and we work with some really, really heroic women's rights campaigners that interfacing with them regularly makes me realize on some level the privilege that I have, no matter what I'm doing, just because I was born and raised in North America and had access to great public education and other things that if I'd been born there, I wouldn't have ever gotten to ever see or touch.
Yep. Well, the very best of luck with it. It sounds incredibly worthwhile, and thanks very much for sparing your thoughts for Fund Shack.
Thanks for having me. It's a great discussion.
You've been listening to the Fund Shack podcast. Make sure you subscribe and visit our website at fund-shack.com for many more video interviews. It's the private capital channel for alternative investment professionals. Thanks for listening.